Coin traders, what's going on? Thanks for joining me for the show. Looking at Fetch.AI FET on that ticker. Obviously, like a lot of the rest of the crypto space, kind of more or less some sideways chop and then a huge pullback over the last month to 2 months here. So looking at a percent pullback from our most recent high, trend high, when we hit it on the middle of May. Still about a 60% pullback in about a month. So pretty substantial from the high here. We're actually looking at almost a 70%, so 68%. So a little bit on the upper end for some of the altcoins that we've seen right now. But that's not necessarily the worst sign, especially after looking back at where we were starting on the fall rally when we were down at about 20 cents, rallied all the way up to about 350. So a 1641%, so about a 17x gain. So a huge upside move. And so even from that point, still looking at about 626%, so about over a 7x return from that point. So still plenty of upside gains compared to most of the other cryptos, despite being pulling back so far. And what's significant about this too is if we actually look at a retracement, Fibonacci retracement to the most recent trend high right now, what we're seeing is that we're actually seeing a very nice bounce kicking off of this 78.6% retracement level on the Fibonacci at 115. And so if we look at previous price trading action, this was a big point of resistance here before this very extreme upside rally. So we know that this is going to be a technical significant level, and especially with all this nice bullish volume here coming off of the bottom, we can pretty much assume that likely we have seen our max capitulation here, and probably it's safe to assume that we have seen a bottom come in. So now next thing we do want to talk about, and specifically on the daily chart here, is like we said, we're having a lot of nice volume and especially having follow through for a second day. So 2 nice bullish candles completely wiping out a lot of this downside action, and especially like we talked about looking at some very nice upside bullish volume here. And although right now we're looking at a little bit of potential for the rest of the crypto space to be pulling back, we know that Fetch.AI still has a lot of potential to the upside, especially after such a move like we just saw. So to highlight this, I actually want to drop down into the 4-hour chart first and then look at some of the longer charts later, because right now we're actually very much focusing on some of the shorter term charts. And so as you can see right now, coming off of this bottom here, and for the low, we were actually looking at a low of 110, even right on the mark. So a lot of nice upside gains, looked at a high coming in of 1.745. So almost 1 3/4 here, and then right now looking at a little bit of a pullback and a flag type pattern. What's great about this though is that we were actually looking, and as you can see, plenty of resistance on the exponential moving averages on the way down, and now we're looking actually to form this nice bullish cross and flip on the exponential moving averages. So the most ideal scenario right now for the bulls, and we can actually draw a pretty nice price level for support here coming in right at 150. So as you can see, a very big point of support finally broke it and then flipped it into resistance here. So now since we have broken it again and we're actually substantially on top of this level, a nice pullback to actually kick off of this level would be a very nice sign and signal. And the great thing about it too is that if we actually go ahead and zoom in on these exponential moving averages, you can see that all 3 of these are pretty much about to line up with this big 150 mark. So we know that we're going to have a lot of support coming in, not only based on previous price level historic supports and resistances, but also on this pullback having a very nice level based off these exponential moving averages, which have been proven to be very nice guides for resistance, which now should flip into that very nice support level. And especially now that we have a price level to go along with it, I would expect 150 to be probably at most, about at least in the short term anyway, the most that we actually would see a little bit more pullback and flag type pattern coming in. Now, when we actually talk about these type of retracements, one of the things we do is actually look to Fibonacci's and think, okay, where would this actually pull back to? And the 38.2 is often a level that we talk about and definitely talk about a lot on the channel. So right now we're looking at a pullback to the 38.2% Fibonacci as being 1.499. So pretty much right along that 150 psychological mark. And as we see again, lines up just perfectly with that price level as well as these exponential moving averages that have now rolled or are attempting to roll almost in a full bullish scenario. So seeing a pullback and especially this type of potential flag type pattern kick off the 38.6, or excuse me, the 38.2 is a very nice sign and signal, especially if we do get continuation upside from that. That'd be a very, very nice bull trigger to the upside, and likely in that instance, looking for a lot higher highs, especially since right now we are getting stuck up pretty much along this big resistance level here. So big point of price level resistance coming in, like we talked about, almost at 770, or excuse me, 175, and then looking for a daily close at 171. So looking left, big period of previous resistance, and then a lot of chop in this area as well, highlighting a lot of support and then flipping it into that resistive zone. So a big zone up overhead, and that's why it's actually nice right now if we can see a pullback for Fetch.AI to actually kick off this 150 level and then probably see another attempt. And that's all assuming we actually get down that low. It is entirely possible that we actually don't see a pullback that significant, and we actually do see a little bit more upside rally, but that could ultimately turn into a little bit of a pennant pattern, allowing these exponentials to catch up before seeing the next leg to the upside again on the shorter term here. So now I do want to switch over into the 12-hour chart, because as we talked about in the 4-hour, a lot of still things similar, and right now we're actually looking at inside bars on the 12-hour chart. So again, if you're not sure what inside bars are, it's where we look at the previous candle's price trading range, the following candle fits inside of that, and then the following candle fits inside of that, and so on and so forth. So essentially we do form on the shorter term a little bit more of this pennant type pattern, and so that's why we do zoom in, you can see a little bit more of that pennant forming. But on the longer term, it does form those inside bars. And typically we know that that's a consolidation type pattern. And we do expect and look for the direction of breakout being what ultimately ends up breaking out either bullish or bearish from this inside bar pattern. If you have any sort of questions about this concept, definitely drop me a note in the comment sections below, or also feel free to reach out on Twitter at coin_trades is the handle over there. So, also want to look at this big price level like we talked about, almost right at the 150 mark. And essentially we can also look at a closing level of support here on this 12-hour chart coming in right at 153.61. So if we do pull back to this zone, this is pretty much going to line right up with where we're actually expecting the 12-period EMA to form right now. So ideally that'd be a great point to actually see support coming in, especially since we did kick off just below this 50-period EMA. And if we do zoom out, you can see how relevant the 50-period EMA has been on this actual pullback. So the fact that now we actually have seen our biggest gap in all of these exponential moving averages, and now on the current setup, they are looking to get a little bit tighter, does favor a little bit more bullish action. That doesn't necessarily mean an immediate spike and pump to the upside from here. What it just means is that likely, especially coming off of a very nice bottom with a lot of this nice bullish volume, we are looking and expecting a little bit more consolidation, holding some of these supports, and then finally seeing another retest of upside movement. Now, up overhead, we're actually going to have a lot of upside resistance, and specifically after passing the 175 mark, about the 171 to 175 like we talked about, we are going to be looking up at a very strong resistance up overhead coming in about just shy of the $2 mark at about 193.93. And essentially looking left too, big points of closing support, and then also big points of resistance before the move to the current trend high right now. So what we're trying to say right now is that even if we do actually form a little bit more bullish pattern, consolidate, break through the 171 to 175, we do need to see it flip into support probably before actually switching and seeing the next leg of bullish upside to break and hopefully top the $2 psychological. So that's kind of a more likely and realistic setup type pattern and scenario right now, just given the fact that we do have a lot of strong resistances overhead that are based on a lot of these levels of previous support. Now, pulling up some technicals, one thing that's kind of interesting is that if we actually look at the RSI, our relative strength index, we can actually see a couple levels of higher lows here forming on this RSI, yet if we actually do look at the price, forming lower lows substantially on this price level. So a lot of that bullish divergence coming in, so we can actually play that into factor, thinking that likely right now we have actually experienced our short-term bottom anyway, especially when we talk about potential for some upside move, and now hopefully getting stuck up in this range between the 50-period EMA and the 12-period EMA on this 12-hour chart. Now, if we go ahead and flip into the 2-day chart here, do like the 2-day chart and essentially left all the levels on. You can see big rejection off the 12-period EMA on this 2-day, but also right now, we still have barely gotten our full bearish break on this 2-day chart. And right now, the 26 and 50 period EMAs are kind of lining up with this $2 psychological resistance point, specifically the 193.93. And as we can see on this 2-day chart as well, looking left, big points of support coming in on the 50 period to prove reliance and a relative level. So now that we are below it, we're likely going to think big points of resistance. So not only in terms of technical price levels, but also in terms of these exponential moving averages, which we have seen have been very reliable in terms of supports and resistances. So the point of all this here is that we're actually not going to expect a lot of huge upside move for Fetch.AI in the short term anyway, and what we actually would love to see is just slowly taking pieces out of these up overhead resistances, slowly one level at a time. So break the level, consolidate, hold the support level, next level, break it, hold it as support, confirm that level, and then be on the way to the next. And it's likely going to take a little bit of time, but as we see, Fetch.AI still can have very nice upside days, as we just saw close here on the 2-day, but then also the daily as well. So now do want to flip over into the weekly chart here and specifically talk about how we're still looking at a very nice setup. So even on the weekly, kicking off support in between the 12 and 26, very nice upside rally, pulling back, kicking off of all these nice support levels on the 12 period exponential moving average, finally breaking it though, but still being able to confirm closing support on top of this 50 period EMA, especially with this nice bullish volume here, despite having increasing bearish volume. So still just under 3 days left on this weekly chart, or on this current weekly candle before we actually print and close the candle. But still a very nice setup, and you can see still getting rejected off the 26, which also aligns and correlates to the 171 to 175 resistance point. And then up overhead, the 12 period EMA will align to this 193 resistance point as well. So as you can see, another reason of why we're looking up overhead as very big points of resistance here. So now looking at some technicals for the weekly here, specifically want to look at stochastic RSI, because the last time we've actually seen this type of pattern, it has been a while, and pretty much we were looking about last summer when we actually saw the stochastic RSI this far smashed below the 20 line here after a very significant pullback. So even on the last most recent pullback where we kicked off the 12 and 26 supports on the EMAs for this weekly chart, still didn't necessarily get that low on the EMAs, or the stochastic RSI, excuse me, and especially not even that far below the 20 line here, and before we actually had a bullish cross and also trending back to the upside. So right now, the fact that we are this far below, and we actually had the levels coming in pretty much right around the 1 level. And so now that we're actually starting to get a little bit more of that bullish type cross, we're actually going to think that that could play a very nice impact, especially after kicking off this 50 period EMA on the weekly and confirming a lot of supports, especially like we said, a lot of nice volume. So we do need to see that follow through here on the charts for the shorter term. But just based off the stochastic RSI, like we said, especially after confirming the last time we saw anything similar, we actually did have a bottom, and then that led to the very next nice upside longer term trend here. So I think overall, we're still very bullish on the AI sector. And as you can see, we had almost a 17x return just since the fall rally here for Fetch.AI, and even about a 7x return even since then, even despite having about a 70% pullback. And that's based off current rates as well. So still not necessarily the biggest worry. And obviously the rest of the altcoin space has been getting hammered along with some other mainstream cryptos, just because mostly retail interest is so low. And a lot of the other money that has been eyeing the crypto space has been based off of Bitcoin, and especially now the upcoming ETF for Ethereum here. But nonetheless, still very confident that we're going to see a lot of upside moves from Fetch.AI and a lot of the rest of the crypto space. And like we said, I think AI is going to be a pretty big sector here for the overall altcoin space as well. But so that it is going to take patience, and like we said, nothing's going to happen overnight. So probably within the next month or so, probably get a very clearly defined direction. Most likely in my expectation, especially if we break some of these upside resistances, we should actually see a trend to the north. But otherwise, we will see that rejection and heading back south. But I don't think that's going to be the likely scenario right now, especially like we said, it does seem a little bit more likely and prevalent that we have seen a bottom come in here. So now just to be able to hold pretty much anything above the $1 psychological level, like we said, got down to about 110. So anything above that will be a higher low. Breaking that down to the $1 psychological would be that lower low, and then testing the $1 psychological as well, which looking left actually was a big point of support as well. So All potential, but like we said, not necessarily the most likely right now, given the short-term momentum to the upside. But need to see if it can sustain. And like we talked about, especially after so many months of just sideways chop and pullback, does seem a little bit more likely right now that a lot of the selling pressure is getting exhausted, especially after a pretty big substantial capitulation candle coming in and a lot of volume for this bounce and a nice V-shaped recovery, setting up for a nice potential, especially on the shorter term here. But so with that, that actually is going to go ahead and wrap up the show for today on Fetch.AI FET on that ticker. Hope you all enjoyed. If you did, please hit the thumbs up, like, and subscribe if you have not done so just yet. Greatly appreciate it. Also appreciate all the continuous love and support. It does mean so much. Feel free to reach out, drop a note down below in the comments sections, or reach out over on Twitter or X at coin_trades is the handle over there. That is going to wrap it up for now, though, so stay safe, take care, coin traders, and I'll catch you back in the next video.